Check 1, 2, check. We are live and direct. Ladies and gentlemen, welcome back to another video of Encrypto'd. I am your host, Cryptic, aka Lord Kryptonium. And once again, I got another gem for you. What are we talking about today? I'm talking the next generation of decentralized perpetual exchange. So let's not waste any time. I know you're eager to know what it is. Let's get right into it. Here we are on the landing page of Equation. Get your calculators out because you're about to calculate how far you about to blast to the moon with Equation. Equation, aka EQ token, just so you know what we're referring to. What about Equation and what makes it special? Well, let me tell you. Since Equation's launch on the Arbitrum mainnet on October 28th, Equation's trading volume has surpassed just over $331 million, and the total leverage liquidity within the protocol has exceeded $574 million, and we're talking USD, USS, love the D. What? That's what we're talking about. Big numbers, great looks, high potential. Okay, now, when we're looking at Equation, we're looking at lower liquidation risk and higher leverage. Okay, no KYC, no deposit required, none of that. When you're looking at different things, Perpetual Protocol, DYDX, GMX, you can see the maintenance margins percentage and the maximum leverage sitting way below at what Equation offers and provides its users. Look at that. Equation with maintenance margin of 0.25% and a maximum leverage of 200 times, way beyond any margin you'll find on the market. Equation have done their equations and they're offering the best potential out there. When we're talking about leverage, they're boosting their LP returns. LPs can provide liquidity with leverage and enjoy liquidity mining rewards plus a share of the trading fees based on their novel BRRMM model. I said an R too many in there. I'm gonna run that back. BRMM model. The LPs can significantly improve their capital efficiency by providing liquidity with leverage. You get it? The fair launch. EQ is the native token of Equation. You know, I don't like to say EQ because that just sounds like the bank institution. So let's go with EQ. EQ is the native token of Equation, like we mentioned before, with a maximum supply of 10 million. 100% of which is generated through position mining, liquidity mining, and referral mining, rewarded to community users. The initial daily emission of EQ is 10,000, right? And this figure can be adjusted via DIO, but cannot exceed 10,000. Great looks. What's a better look? Let's look at the roadmap to see where they're headed. In September 2023, they ran their testnet check. And by the way, they were audited by ABDK, which is amazing. You know, we always talk about reliability and transparency. Well, it's really good to know that you're dealing with somebody reliable. In October 2023, they launched their mainnet with the EQ fair launch. Amazing. And this month, they finally released their position mining. And if you stick to the end of this video, we have something special to talk about. So I hope you've made it far enough already, but last till the end of the video, you'll be lucky enough to find out something awesome. And don't skip right away. We got some important information that we need to unpack. And finally, by December, the DIO governance gets launched, and you know it's serious when. Okay, now the important tokenomics. How did they break it down? How are they running so efficiently? Well, let's be part of the Equation ecosystem. The tokenomics. In traditional tokenomics model, the complex interests between community users, the founding team, and early investors often lead to disagreements and divergent consensus during the operation and governance of the protocol. This greatly hampers the sustainable development of the protocol, but Equation adopts an innovative hybrid tokenomics model that combines fungible tokens and non-fungible tokens. This hybrid model establishes exclusive incentive channels for different roles in the ecosystem aiming to unify the long-term development goals of Equation while safeguarding the interests of liquidity providers and community users. Now, while we're talking about community, don't hesitate. Like I always mention, hover over their Twitter, their Discord, their Telegram, their Medium. Great community. A lot of people, if you have questions and you want to learn more and stay in the loop of all the opportunities, you're definitely going to want to tap in. So go ahead and do that right now. So as we mentioned in the roadmap, and we'll talk about this throughout, position mining. What is that? This is Equation's program to incentivize trading users to actively explore their perpetual contract products. They officially launched the position mining program at 10 a.m. on November 6th. Okay, any user holding a contract position in Equation will be eligible for EQ token rewards. The larger the position and the longer it is held, the greater the rewards. You get it? Currently, 10,000 EQ tokens are released daily, 50% of which are allocated to position mining. Position mining is a great incentive and a great way for you to hit the moon. Long story short. So yeah. Now let's hover over to the white paper and break down the token of EQ a little bit more. Let's talk about how to earn EQ. So first you want to hold contract positions like we mentioned. Allocate 50% of the total daily EQ emissions. Provide liquidity to pools. Allocate 8% of the total EQ emission. 3. Contribute liquidity to the risk buffer funds. You allocate 20% of the daily EQ emissions. 4. EFC member NFT holders can create referral codes and earn rewards based on the proportion of the referees' contract positions or LP positions. You allocate 20% of the total daily EQ emissions. And number 5, EFC connector NFT holders can mint member NFT and earn 10% of its EQ rewards, and that you can allocate 2% of the total daily EQ emissions. And now, like we mentioned before, how is the EQ token broken up? Well, take a look at their allocation chart right here. 50%, the whole whopping has split. The amount will go to traders, position holders, super generous. And 8% goes to liquidity providers, so all the pools. A 20% goes to the liquidity providers on the RBF side. Another 20% goes to the EFC member NFT holders. And finally, 2% goes to the NFC connector NFT holders. This is great. This staking model is super efficient and adds big multiplier to all the users. All right, guys. If you made it this far in the video, I applaud you. But hold up. First, I want you to smash that like button. Comment. Let me know what you think about this so far. If you're taking my suggestion, again, I do not direct anybody. This is your due diligence. Do your research. Figure out your ways and if this is appropriate for you. But as for me, Lord Kryptonium, I give this project the approval. However, we're not done. So if you haven't made your mind up, check out their latest promotion. What is going on? What's poppin'? I told you if you last this long, there is a little surprise and it is a giveaway, all part of the plan. So, Equation is celebrating with a massive giveaway. So since November 10 till November 26, they gotta do this shit ASAP. There's still some time. Giveaway from $2,000 USDT plus 100 NFTs plus daily mining bonuses of 5,000 EQ tokens. If you want to join now, the link will be below. You need to go down there. We'll send the link with an invitation code. There are different ways to sign up. You can check in to get verified, follow their Twitter, tag 3 friends, join their Discord, open a position of any size Equation, refer friends, and you will get the chance to enter this amazing giveaway. 2 days left. Don't miss out your chance. And it's simple as that. So go ahead, get on that. And now back to Encrypto'd. I hope you enjoyed this video. I hope you enjoyed Equation. Let me know what you think in the comment section below. So anyways, y'all, Cryptic signing off. Peace of love, and I'll catch you next video.